What's the worst time in American history to be an investor? Now, many of you might say it's the Great Depression, because we know the Great Depression, the stocks fell like 90% over the course of like 1929 to 1933. That's not true, though, because investing isn't just all in stocks. Investing can be in other things, just keeping your money in cash. And what happened during the Great Depression was a contraction of the monetary supply. And whenever they contract things, what happens to the things that are left of that subject? In this case, cash is being reduced. That means the cash that's still left is more valuable because there's left of it. It's literally the exact opposite of inflation. Is deflation. Inflation is devaluing the currency supply that's out there today by issuing more and more currency. You're devaluing the currency that's out there. When you're contracting it, you're increasing the value of the currency because there's less currency available. So if you weren't in stocks, you were actually you're holding the golden key without question. The Calvin Coolidge time in the early 20s, there's a pretty significant recession, but silent Cal, because he believed in markets, let the markets take care of it, and that's why you don't hear about the chaos that could have ensued in the 1920s, the early part of 1920s. Woodrow Wilson, desperate to get us into World War I and increase the ever-increasing encroaching power of the government. There's some issues in that during that time frame. They'd be like 1905, if memory serves, and certainly in the 1870s and whatnot. I think 1879 or something like that. I remember, off the top of my head, I can't remember. But there's a big one in the 1870s. But again, there's no inflationary issue at that point. There's no Federal Reserve Board. There's inflation, Confederate dollars and things of that nature. But in terms of what we're dealing with today, there's nothing like that, nothing at all. So these 9 years that I'm going to show you are probably going to surprise you in terms of the absolute chaos that that investors incurred upon the time. I mean, frankly, I was ignorant of this. I'm a student of the business of the history of the markets. I had no clue until I was doing my studies on crunching some numbers on the barbell prescription investing barbell investing portfolio for retirement, and I came across it. Man, this was worse than I ever anticipated. It's by far, I would think, the worst that's ever been. Now, if someone could prove me wrong, that's fine. If it's worse than this, I'll cede the crown to you. At the end of the day, though, I don't care, because this is horrible. And this was in my lifetime. So let's dive right into this. All right, so what we have here is the years from 1973 to 1981. That's 9 years. 1, 2, 3, 4, 5, 6, 7, 8, 9. Watch this. Inflation, 6.2, 11, 9.1, 5.8, 6.5, 7.6, 11.3, 13.5, and 10.3. 10-year Treasury yield, well, is actually pretty good, but still it doesn't even come close to the rate of inflation for many of these years. Actually, that's not true. So 10-year Treasury, right about the same as rate of inflation. So you can see all that, 6.8, 7.5, 7.99. The S&P started in 1973 at 118.05 and it ended at 122.55. So literally the S&P 500 in terms of price grew by all of 4.5 points over that time frame. The dividend yield was not even anywhere near inflation. So we got 1973 at a 3.57% dividend yield, but inflation is 6.2. 5.37% dividend yield, inflation was 11. 4.1, inflation was 9, 3.87, inflation was 5.8, 4.98, inflation was 6.5, 5.28, inflation was, not even close. So the dividend yield, while it gave us a positive return of the S&P 500, it got consumed by the rate of inflation. So 100,000, then on top of that, we had a market decline of 14%, 26%, 7%, and 5%. So in 9 years, 5 years, we had losses, and 2 of those years are pretty significant. Now, we had a couple good years of gains, 32, 23, 37. And so at the end of the year, at the end of the 9-year time frame, we started with $100,000 and we grew to $157,000. That might seem pretty good, but watch this. If you needed $100,000 to live on and you thought you were going to equal that with your stock investment, so we have $100,000 in stocks and we're going to spend $100,000 a year, and we want to see which keeps up, your $100,000 required you to spend $217,000  9 years later. your $100,000 in stocks only grew to $157,000. That's it. So if you had stocks in 1973 and thought, hey, I'm getting a 5% dividend yield on average, or let's say, 4.5% dividend, let's say 4.5% dividend yield on average, you're like, that's pretty good. No, you actually were down significantly relative to the inflation. You say, I put my money in a 10-year treasury bond. Well, your 10-year treasury bond, even that was $1,000 less than inflation. But even worse, what were the tax rates? Because remember, this is where the tax bracket creep with inflation. You did not net $216,000 here, my friend. You were losing, we'll say, 25% of that to inflation. You were losing 25%. I don't know exactly what the tax brackets were, but during the Nixon and Carter years, they weren't low. They weren't Reagan-esque, that's for sure. You were losing, we'll just say 25% of that to inflation. So if you lost 25% of your $57,000, you had $57,000 minus 25%. You were down to $42,750. That's how much you made in those 9 years. You're up $42,750. And here you lost $25,000 on $116,000. Here you're up $87,000. And yet here you're down literally $117,000. So in both scenarios, you were down by 217 minus 87. So here you're down 117 minus 87. You're down $30,000. You're short. Inflation beat you by $30,000 here, and inflation beat the S&P 500 by 117 by 42. 117 minus 42 by $75,000. You could not escape. You could not escape. That's just that's dastardly. That is dastardly right there. And you think about it. What if, you think about the history of what made Reagan get elected and what made him have the intestinal fortitude to get Paul Volcker to nip this inflation in the bud. Thank God he did, without question. You might not like Reagan, but look at this, man. This is the end of Carter's. And to think about Reagan, while he won 40 states, it wasn't nearly as of a landslide as what it seemed. If you look at the history of the news in 1980, they called California early. That pissed Carter off, and that hurt him for some of, I think, the Senate seats, if memory serves. But it was still pretty close. In fact, I think Carter was even leading in the polls with like 3 days left. It was close, man. No one sat there. It's like when Trump won. No one sat there and said Trump's going to win or Reagan's going to win. They all thought Carter had it. But you think about it, 1980, 13% inflation. The stocks had just had, they did that right there, but 32%. But that's after all these years previously. It's crazy. I'm just, yeah. And then the tax bracket creep, and Carter wasn't talking about. Look, I don't have any qualm with Carter. He wasn't a good president, but he did deregulate a lot of stuff. I wish he'd get more credit for that. Ted Kennedy, heaven forbid that guy. He's just not a good person, but they did deregulate a lot of things out there. They did a lot of stuff that I think under the guise of the typical Democrat versus Republican that should get somewhat notoriety for the good that they did. But at the end of the day, this is what we're dealing with right there. High taxes, high inflation, low growth. And Carter, he didn't lose like Mondale did. It was a landslide in terms of electoral college, but in terms of the actual vote tally, it was a lot closer than a lot of people think. And that's, what if there's no Iran hostages? What if there's no crazy rabbit? Just what if? What if Carter maintained the victory? What would be today? I don't know. Scary to think about. But this is the worst 9-year time for investors in American history that I can see. Love to hear your thoughts. If you have a difference of an opinion, let me know. Put them in the comments. All right, we'll see you next time.